Hey guys, mobile trader. So first on our education, we're gonna first talk about Forex market structure infrastructure, and then after we pretty much go over what all this means, we're gonna go ahead and hop on the charts. So let's do this. Now, so basically to understand Forex market infrastructure for everybody who wanted to learn about this, basically you wanted to understand, what makes the price move, what goes up and down, how is, when you look at a chart, basically what is the understanding of a chart. And the Forex market is a desensitized market created by an interbank network of investment banks, retail banks, and liquidity providers that create the buy and sell prices for all global currency pairs being traded. They are known also as called as market makers, and they collectively create the market. Pension market investments banks only deal with large corporations such as pension funds, hedge funds, governments, family offices. Banks and liquidity providers deal with small and medium-sized corporations and retail brokers. Retail brokers only deal with retail traders, which is us, because we do not control the market, guys. That's one thing we do not do, is we do not make it go up or down. Please understand, the market makers make it go up or down because they have trillions of dollars. So it's either governments, banks, families, or a person with a huge individual net worth of money that can affect the market. As retail traders, our money does not really make price go up or down. A lot of us make it go a little bit, but for those huge movements, it's the banks and hire people a lot more capital. So always understand, when you see huge movements, it's not because of us and a whole bunch of traders buying it. It's really because the bank's moving a lot of money at one time. So for international trading sessions, uses the international banks, the markets to keep the forex market are open 24 hours. And the reason they're open 24 hours because the forex market is allowed to trade in any session. Unlike the stock market, the U.S. stock market, where you trade the U.S. stock market at 9:30 a.m. to 4 o'clock p.m. This goes all around because there's different sessions of the forex market. It's a global market. It's not like the stock market for the U.S., the stock market for the China, the stock market for the European nation. We're all one global market, and so we all trade at one time. So that's why it's 24/7. And so pretty much that is the understanding of what market infrastructure is. Infrastructure is created by the market makers. The reason you see price going up or down, yes, we have some type of effect, but we do not have the main effect in forex market infrastructure. The big banks, the government, huge families, and very wealthy individuals make the market move. Okay, now basically I'm gonna take all this and I'm gonna throw it on the chart. All right, guys. So what you're looking at right now is the euro dollar daily chart, which understands for each of these, which are called candles. Each of these candles equal days. So 1, 2, 3, 4, 5, 6 equals 6 total days of trading happening, right? So we're going to go ahead and hop into infrastructure. Like I said, infrastructure is created by the market makers. All these huge, massive movements, these are created by market makers. You see these areas where price is just kind of going sideways. These are created by us. Now, market makers may have an influence in a market, which they heavily do. But when it's sideways, that's this trading zones. When it's a market that when there's a market that completely goes in one direction without no stopping, is a market maker, like in this situation. We humans, normal people, do not have hundreds of trillions of dollars to make an economy's price completely drop unless you are a very wealthy person. So this takes a lot of banks, central banks, governments, individual people to push this price down. And this is us. This is traders. We're traded back and forth. All we traders do is follow this. So back to what I was saying about infrastructure is, you can't think that, you'll make a huge difference in the market with all your analysis, because anything can happen. Anything can be broken. So to dive deeper into infrastructure and understanding how it works and how understanding price is going to go, right? So if you can notice, there's a trend that's trending down on the daily chart, right? So as a trader, this is infrastructure to us. As a trader, we look at sell points. As every time, as you can see, it gets close to it, it sells off, right? So what you expect that's going to happen when we get up here? A possible sell-off. But what also do you know that's what's happening? You see how we just have this huge, massive, array of area, right? Huge, massive array area. But as you can see the trend line coming down, can you kind of see the pattern, right? Can you kind of see a pattern of like a triangle? You get this arrow down, you got this line that's right here, right? Kind of creating a wedge, which kind of creates a bullish intake. So we take this market infrastructure here, which is called a double bottom, which shows a very bullish sign that the market is possibly going to rebound and push up after this price. Doesn't mean it won't happen, but as patterns happen, that's what we predict. That's why we trade. We traders rely off of patterns. So this is a pattern that we're well known called a wedge pattern. And so when this happens, either when it breaks down, it's going to break and hit my stop, or it's going to break out and hit my take profit, right? So my infrastructure about this is, you see there's resistance here. I mean support. And basically how I like to explain support is when you are like in your house and you have a floor. It's support. You don't expect to fall through. Now, if you beat up that floor a lot in your house, of course it's going to break through damage and fall through. But you expect it to hold. So this is like our floor. Same with resistance. Resistance is an area like your ceiling. You're not supposed to break through it, right? Your ceiling is supposed to be protection, but that doesn't mean your ceiling won't break down. Like, sometimes your ceiling has leaks. Things get through. It happens. But we try to take this, as we can see, we can see price coming slowly down. Candles are not as huge anymore. Price is kind of slowing down, and we're kind of settling around this area, which kind of gives me an indication, a good indication that we're going to pop. But that doesn't mean we won't, and that definitely doesn't mean I won't get stopped out before it pops too, because we can also have fake outs. But that's for a later day, another education. That's pretty much it about market infrastructure. Pretty much hope that was easy to understand. We're going to go over a quick summary about it. Market infrastructure is the prices that you see that goes up and down. This is created by the market makers, the huge movers. When prices going sideways, that's why they call it a trade zone. This is us. We trade through these zones to find support and resistance levels, because we can't find support here anywhere. We can try to find areas of support. That's where we get in, right? So you can tell this area, right? You could have tried to get in around this area. We also use different things like indicators to try to help us support in these type of things that can try to help us get into these trades. Like, this will probably put in a good area because of the EMA line. But like I said, this is a whole different topic. But basically understanding market infrastructure and why the prices go up and down. All right, guys. Hope you enjoyed the video. I'm out.